GM, good morning. Welcome to the Milk Road Show, the daily crypto show where we break down crypto faster than you forget someone's name right after they introduce themselves. I'm your host, Jay Hamilton, and today we're joined by legendary crypto investor and educator, Lark Davis. We are talking about what the heck is going on in the markets. Everything's puking, everything's dumping. What's causing all this uncertainty? Is the top in? Is the cycle over? Or should you be buying the dip? Trump's inauguration is 1 week away. That's a major event. Is that a sell the news event or a buy the news event at this point? We're going to talk about that. We're also going to talk about what's going on with the Dixie and the dollar. The US dollar is just too strong. It's doing too well. How do we deal with that? Bond yield curves are also causing issues. So it's just a whole bunch of macro stuff that's really causing a lot of uncertainty. We're going to talk all about that. Before we jump in, with Trump's inauguration being such a big news event, we are going to be doing a bunch of episodes with experts on regulation, experts on American politics, in order to make sure that you guys are set up to understand how this is going to affect the markets really in Trump's first 100 days in the office. So if you're not already subscribed to the show, smash that subscribe button so that you make sure you get all these episodes that are going to be coming out over the next 2 weeks. Before we jump in, we'll just take a minute to hear from our sponsors who make the show possible. Meet Odos, the DeFi aggregator that makes your token swap smarter, faster, and a whole lot easier. Tired of trading like it's 2019? Odos finds the best prices for your swaps across 900 liquidity sources and 14 blockchains, so you always get more bang for your crypto buck. Whether you're swapping, setting a limit order, or just avoiding gas fees like the plague, Odos has you covered. It's like having a genius trader in your pocket, minus the coffee addiction. Join 3 million wallets already using Odos to power over 6 billion in monthly trades. Start making smarter swaps today at milkroad.com/Odos. Lark, welcome back to the Milk Road Show.
Thanks for having me back on. Oh, what a day.
What a day. Okay, so we're recording this on Monday. This episode comes out about 24 hours from now on Tuesday. So maybe things are looking better by tomorrow, but my gut says probably not. It sort of feels like this uncertainty is really, we're all waiting for the inauguration at this point is the next major event in the calendar. Lark, what's standing out to you? What do you think about this current market dump?
All macro, baby. It's just 100% macro. Everything macro is just screwing the market up right now. And it's actually quite ironic because 6 months ago we were talking, oh, the recession's gonna come. Oh my gosh, it's gonna send the markets to zero. Now it's like, oh, the US economy's too strong. Everyone's got jobs and the economy's trucking along. The GDP's pumping. Oh no. That's it. Can we make up our minds, people? Anyway, there's a lot of big things that are affecting the markets this week. Obviously, we had the non-farm payrolls come in last week, and they came in good. The markets hated that because immediately they said, well, it means the Fed's not going to cut as much. The crazy thing is, and you can have the opinion of this, and the markets and Wall Street in particular don't really care about it, but you can actually have interest rates be in the mid 4% zone or wherever they are right now, and markets can still pump. That's the crazy thing. Earnings remain strong. The people have jobs. When people have jobs, they have money to buy dog coins. It's crazy, I know. But that's one thing. The real specter, though, there's so many things, isn't there? But one of the big things is inflation, okay? We have the bond yields and stuff blowing up too, the dollar index moving up, but inflation is definitely a problem right now. The inflation report's coming in on Wednesday this week. So yes, expect the potential for a lot more turbulence in the market. To how much extent that inflation print is already being priced into the price action today in the market, we will find out, of course, over the next few days. Currently, inflation is 2.7%. Expectation is that it's going to go to 2.9%. Now, it's still under 3%. It's still relatively pretty cool. Remember, we were at 9% a little over 12, 14 months ago or something like that, okay? It was not that long ago. We were at 9% inflation, which is insane. We've come down really hard. 2.9%, though, that's enough inflation that gets the market jittery, thinking, holy crap, inflation's about to make a major surge again. Now, the Fed, to whatever extent we can trust them, is saying that they're not super worried about inflation in 2025. They say we're going to see an initial surge, but it's not really going to be a big problem this year, although, of course, they are tracking it. But these are the same people who said that inflation was transitory before it surged up to 9%. So, yeah, no. Don't take the word for a lot of stuff. Look at what they actually do policy wise. And of course, 2.9% inflation, that's what the market's pricing in right now. If it's 2.8% by some miracle, then markets should really like that. 2.9% market's probably going to be fine with it too. If we come in hotter than 2.9, like 3 or gosh forbid 3.1 or 3.2, watch out below because that's not going to be good. Market's not going to like that, okay? So that's what we're looking at right now. Inflation being a very, very big problem and one that is very much on the mind of macro investors this week.
Mhm. Okay, so let's go from because you mentioned that there's so many things right now to understand in this macro landscape. Okay, so we got inflation, which we'll be watching this week. Let's talk about the political intrigue or the political theatrics that are happening pre-inauguration here with Trump talking about tariffs and country takeovers or country acquisitions.
You.
Yeah,
He's gonna buy your
Canada.
country.
Yeah, geez. Apparently I'm going to be the 51st state over here. How much do these political theatrics have an impact on the market?
Obviously there's always an impact to this kind of stuff, right? But let's see what about actual legislation. I think Trump likes to stir the pot a bit. He's not going to do all the stuff that he's throwing out there, but he's just throwing things at the wall, see what sticks, and ask for more than you want, then see what you can get in the end, and all that kind of stuff. So, in terms of stuff like tariffs, Trump did tariffs, by the way, last time, didn't cause some massive inflation runaway. Okay, it didn't. His tariffs last time were largely non-inflationary. You might see a similar situation playing out this time. Okay, there's uncertainties, and markets don't like uncertainties, so there's always that to keep in mind. But one thing that we anticipate with a Trump presidency, only 7 days away, man. Ah, come on, Trump, take it over. Say something good about Bitcoin. Let's go, dude. The big thing with Trump getting in is Trump is going to want a weaker dollar. Okay, he said as much already. Right now, the DXY is just rallying. It's this giant wrecking ball up to 110 today, and that's bad for risk assets. Okay, dollar rally is bad for risk assets, bad for foreign currencies, bad for basically everything else is not the dollar. Even it's not great for the dollar at some point. So the dollar index has been surging like crazy. But here's the funny thing. We now have previous history with Trump, so we can actually look back to the last time he got into office and a similar situation happened. By the way, the charts for January of 2017 are just like almost insanely exactly like playing out right now as they did back then. Anyway, but the DXY rallied up until the Trump inauguration and then plummeted. Trump wanted a weaker dollar. Trump got a weaker dollar, okay? Because that gives more negotiating room for doing deals and American business and trade and all that kind of stuff. So a weaker dollar is very good for risk assets. Strong dollar bad, weak dollar good. Trump wants a weak dollar. Trump's going to get a weak dollar. Now, the balancing act is how is Trump going to get a weak dollar without causing even more inflation, right? So there's all these little mechanisms that might get pulled in the background. The Fed's going to have to do inevitably some kind of quantitative easing. The reverse repo pools are, the overnight repo pools are running low once again. Fed liquidity is going to have to come flooding into the market at some point, probably in the next couple of months in a major way. Same time, we're going to have to be weakening the dollar. Those bond yields surging up to around 5%. That's unsustainable and will have to be gently popped by the Fed.
Gently popped is a nice word. I imagine Jerome Powell gently popping something. Just that brings quite a visual to my brain. Okay, so before we move on from Trump and the inauguration, do you see this as to me, the setup feels like we have basically removed this as a sell the news event. It felt like it was sort of lining up to be a sell the news event, but now it feels like all this uncertainty, the Fed being hawkish in December, has really set everything up to be, hey, let's wash out all the uncertainty and let's just wait to see what happens. How are you tactically positioning your thoughts leading into next week?
It almost becomes a buy the news event essentially. And look, here's the thing: macro trumps all, liquidity trumps all, central bank liquidity all this sort of stuff, strength of the dollar. These are the most important things driving markets because as we've seen, crypto is not immune to any of this stuff, and there might be small sectors of outperformance even when markets are generally doing bad. But we tend to follow even more closely than we did before, along with equity markets. So as the indexes move up and down based on central bank liquidity and positioning around inflation and all this kind of stuff, crypto is going to move right along with it. That being said, I would just like to remind everybody real quick, we are literally about to get the most rapidly, not just mildly, but like rapidly pro-crypto administration of probably any country in the world, except maybe like El Salvador or something like that. We are going like balls to the wall pro-crypto stuff in America, and I don't think that's fully priced in. Now, if we get a major macro risk-off environment, crypto is not going to benefit in the same way that it would if we had a risk on environment, right? But again, a weaker dollar coming with Trump is what the plan is. That should create a good risk on environment, not a risk off environment. But you got to keep in mind, Trump himself owns crypto, okay? He's got a DeFi protocol. He's done all kinds of stuff in the crypto space. He's promising a strategic Bitcoin reserve. JD Vance owns Bitcoin, owns different cryptocurrencies. The incoming Treasury Secretary, Bessent, he's pro-crypto. The person taking over the CFTC, I think it's not confirmed yet, but it's likely to be a lady who's very pro-crypto. The new SEC head, very pro-crypto. We're going to get all those altcoin ETFs coming through, okay? The team is stacked. We now have a crypto czar in the White House. And there's a rumor floating around today that they're going to be putting together a 24-person subcommittee for cryptocurrency regulation in the USA and to help with the mechanics of the creation of a Bitcoin reserve for the country. These things are absolutely insanely big. Okay, so we'll see how the macro situation plays out, but I don't think that we should underestimate the impact of all of this incredible legislation that could start happening under one of the world's most pro-crypto administrations.
Yeah. I think that's a really, I do think a lot of that is not priced in, and a lot of people are missing that because the thing you have to remember is if we look back to the last time Trump won, I think Trump was surprised that he won. And as a result of being surprised, or even if he wasn't surprised that he won, I don't think he was not positioned with the team around him to manage the economy in the same way that he is today, right? He is coming into office in a very different position, not just for good for crypto, but good for the economy as a whole, because he has so many incredible brains around him who will be supporting what do we need to get to in the first 100 days. And now remember, a lot of this stuff, this is where I'm having a difficult time with timing on the market right now. And would love to get your thoughts, Lark. It feels like everybody talked about Q1 being so great. And hey, 2025 Q1, 2025 Q1. And now I can't decide, are we going to see a post one scenario? We see a post inauguration pump. Trump says a few things that everybody gets really excited about, but he's not actually going to do anything immediately, right? It's going to take, maybe he gets a win maybe he gets a quick win in the first 30 days and that causes a market pump. But it feels like we might be in this scenario. And we had Michael Howell on the show from Cross Border Capital today, and he talked about how he thinks the volatility could extend for the first half of 2025. And yeah, we could go up, but we also could see Bitcoin as low as 70K, and we might be in this real volatile space until we get into QE, which he doesn't expect to come until later in 2025, like second half of 2025. Some people think it might come sooner than that, but I don't know. Anyways, there's all these factors that play around timing. What are your thoughts on the rest of Q1, Q2, and the way the year plays out?
Yeah, there's so many variables. When will the Fed do QE? They're going to have to do QE at some point. So when's the money going to start flowing? When's the liquidity going to start pumping back up? All this kind of stuff. How bad inflation is going to get? 50 different variables that all have major impacts on the market. Okay, it's a lot to look at. And everyone's still going, oh, but the yield curve's uninverted and the new Great Depression's coming any second. Quick, everybody risk off now. There's still a lot of fear in the market. The flip side is, again, the economy's in a very strong position. It's roaring. Things are doing okay. So in terms of timings, I still think we are potentially in for a March, April, let's say local top. first peak of the market, right? Does that mean it's absolutely all over after that? Let's see what happens with macro, right? But what gets me thinking is that you might see that Q4 250K peak area would be the Bitcoin strategic reserve stuff doesn't happen on day one. Now, maybe he runs through an executive order saying, hey, let's keep the Bitcoin that's currently held by the DOJ. Okay, if they don't, sell it by them, which I don't think they're going to be able to. It takes a little longer to actually put everything up and set up an auction and all this stuff, and that hasn't happened yet. So it's probably going to still be there. So that could be an easy, low shelf, easy to grab win for him. The other stuff, though, actually buying more Bitcoin, that could be debated in Congress. That could be a big thing, and it comes, later this year. And that'll actually be the final market top, which is counterintuitive. You think, well, America's going to buy all this Bitcoin. Surely that means the price is only going to go up from here. But it's probably actually going to be a major rally into it. The biggest sell the news since El Salvador making Bitcoin legal tender. If you guys remember back when that happened in 2021, every country's going to do it now. It's going to be amazing. It's going to be like everything everywhere all the time. It's only going up forever. Probably be a similar situation if we get that sort of sometime in Q3 or Q4 happening. Could be the final peak there for the market. Obviously, nobody can exactly predict how liquidity flows are going to happen, but it's one of the most important things in terms of continuing to see the market go up. We do need liquidity to turn around. Okay, liquidity has to some extent started to probably bottom out on its short-term dip here over the past 6-8 weeks or so that's been going down. When we see liquidity bounce and start moving back up, I think that becomes the key indicator for how well markets are going to do for the rest of the year. And some analysts are saying that liquidity run could take us through the entire year right into sort of December or January 2026. When that liquidity run is finished, that's when the bear market starts. So there is a good thought that we could see that March, April local peak, let's say. My personal thought has been that by May, I might be completely out of altcoins, go in cash for the summer, try to relax a little bit, Bitcoin and cash, right? Just Bitcoin and cash for the summer, come back in late August, early September, reassess, see where we are, see what's going on. But obviously we have to have a rally between now and then in order for that to happen, right? So general thought right now is that's what I'm looking at. But I still see that we can see that big local peak still coming. Okay, as that enthusiasm comes in for, okay, Trump's here, we're going to see big things happen, and there's going to be big announcements and big news and big things start moving. But people are going to overestimate in the short term the impact of all that stuff, but it can make markets rally. And they'll sort of underestimate the long-term impact of that stuff, which is very, very, very bullish, right? But takes a little while to play out.
What about the rest of this week, like leading up to the inauguration? Do you think we've bottomed in this little dip here in this pullback, or do you think we have further down to go?
This is where Bitcoin is right now. It's interesting. Actually, Bitcoin got down to about $89,000 today. Man, it's been so crazy. Bitcoin's been very, very strong. Just
very strong. I'm amazed that it's holding up like it is. I thought we would go lower for sure.
Yeah, I mean, people might be freaking out about an $89,000 Bitcoin, but I don't think anybody who's in Bitcoin is freaking out about an $89,000 Bitcoin. Everybody who's got, up to the eyes in shit coins, you're worrying. I'm worried about my shitcoin portfolio because these things have gone down 50, 60, 70%, some of them in the last 14 days. It's been absolutely insanity. They went up 1,000% and now they're down. So you're still up, but you're not up as much as you were, right? So there's problems there. But Bitcoin's actually held up incredibly well. It's actually, at the time we're recording this, obviously by the time you guys are listening to this, things will be different. It's only down 17.5% from the all-time high, which is historically tiny. Often during a bull market cycle, we will have corrections of 30%. And that brings us all the way back down to 75K. Not saying that's the most likely scenario in the next days or whatever. I don't necessarily think that it is. But the market is showing a lot of weakness right now, right across the board. Okay, so weakness in stocks, weakness in crypto big time. All the altcoins are getting absolutely savaged right now. It's very, very bad charts right across the board for the majority of altcoins. Are they closer to bottoming? A lot of them come back down to major areas of support. That sort of, bounce or I cut it off kind of support, you know what I'm saying? And so let's see how it plays out here. But Bitcoin, I think, has done pretty well. Throughout the week, expect chop. expect chop, especially around that CPI coming out on Wednesday. Okay, so that's going to be a big thing. Again, we explained how the market could react to that depending on what the number is, but that's going to be the big thing for the week. And after the CPI, depending on how that goes, semi-smooth sailing in clear waters until the Trump inauguration. No other big economic data points are going to be dropping on us between the 15th and the 20th. So fingers crossed.
And then we got the next FOMC meeting, which is the 29th. I think the 29th is when they'll make their announcement. You expect them to hold neutral based upon Jerome Powell's comments in the last press conference?
Yeah, I don't think I don't think we're expecting any rate cuts for a while here. So I think the next next FOMC, whenever it's coming, is going to be a nothing burger. We shouldn't expect anything from that. And I don't think the market does expect anything from that. Currently, the expectation has gone down from expecting 7 potential rate cuts this year to 2 or 3, and
1 or 2?
some even saying there might be none.
Oh my
Right. So,
gosh.
but that's also,
But you don't think that's actually like, you think that's actually going to happen? Like, I think he over indexed to make it hawkish so that he can now give us probably still, I don't know, 4 rate cuts this year. Feels like, I feel like 100 basis points in rate cuts total this year feels like a strong assumption.
as long as inflation doesn't go up too much, right? If inflation starts pumping up, then there won't be any rate cuts, and they'll just pause and hold until they see rate. You even have people now saying if inflation goes up too much, the Fed's going to have to start rate hiking again to get inflation back down. That they cut too quickly, that they cut too hard, too fast, and it's now opened this window for inflation to come back out, essentially. So let's see. We've got wild predictions on either side. From we're still going to see 4 or 5 rate cuts this year to literally the Fed's going to have to start hiking interest rates again, and everything in between in terms of opinions. But it all comes back down to what's going to happen with inflation, because the economic situation, unless something changes dramatically in the first few months here under Trump, which weakening dollars probably going to lead to more economic activity, probably not going to change for the negative immediately, right? So the U.S. economy is not in a recession. It's growing 3-4% every quarter, GDP wise, right? So GDP is very strong. Jobs markets are doing good. Unemployment is low. Okay, people are hiring again. Unemployment is near record lows. It ticked up a tiny little bit, but it's not like it surged, from 4% up to like 10% or something. It went from like 3.9 up to 4 or 4.1 or whatever. It's a nothing burger right now. So inflation is the thing to watch right now, and that's going to determine how many rate cuts we get this year.
Mm-hmm. Mm-hmm. Okay, so you're tactically aware of the situation, and you're expecting chop over the coming week. Post Trump inauguration, you think we could see, I mean, I think it'll still be volatile, but you think we could lean into a good March, April period. And then it's going to be, all eyes are going to be hard on macro at that point, because it'll be a
Yeah.
big question of whether we've seen QE yet. Is QE coming? What's the Fed saying? A lot to watch, basically. And it just feels like we had so much energy and so much hype coming into 2025. The everything bull run, everything's lining up, it's going to be perfect. And then we start the year and it's like, oh, like, is this still happening?
The macro has definitely changed quickly, and that's of course the biggest worry in the market. Chart wise, look at the charts from January 2024. Looks almost exactly the same. Look at the charts from January 2020 when Biden went to 2021, right? When Biden came in, looks almost exactly the same. And look at the charts from January 2017, inauguration year for Trump. Charts look almost exactly the same. Initial pump going into January, big dump in the middle of the month. By the end of the month, you start smoothing out and moving up into a bullish February and March. So fingers crossed. That's what we get this time.
Before we let you go, I do have to touch on, because I don't think we've talked to you about AI agents and crypto AI yet.
Not really. A little. We touched on a little bit in one episode, I think, but not very much.
We've talked about it a lot on the show. Just would love to get your thoughts on the narrative. Is it a bubble? Is it going to burst in now? Is it got legs to go for the rest of the cycle? Are you allocating anything to the space? What are your thoughts?
Yeah, I've allocated 3, 4, 5%, something like that, of the portfolio so far into AI agent stuff. It's a bubble. It'll pop. It'll be dramatically bad when that happens. Between now and then, but the bubble's like this right now, and it's got to expand out like this. And from here to here, there's a lot of money to be made. But you don't let yourself get fooled into thinking that any of this stuff is going to retain value in the bear market. All these coins, when the bear market comes, are going to go down the worst. You can see recently during the sell-off, these AI agent coins have been some of the absolutely most savaged coins. They've gone down dramatically, right? Low liquidity, all that kind of stuff. They pump really fast, but they also dump really fast when the market goes into a risk-off kind of mood. And I think the recent market downturn is a nice reminder for everybody. You got to remember to take profits on these things, because when things change, they change real fast. And in a matter of a few days, markets are down more than you can possibly imagine. But I like AI agents. I like the AI agent coins. There's a lot of great things going on here with them. A lot of people are saying this is going to be DeFi, whatever we're saying, DFAI, whatever, summer, right? Which, if you weren't around in 2020, we had all these new DeFi, decentralized finance primitives popping up that got people very excited, made a lot of people a lot of money very fast. We're seeing a similar thing happening in terms of AI development right now. Now, we're not talking about sort of lame AI. Well, not like, lame AI, but, sort of the more like traditional AI stuff that we might imagine, like AI blockchains or just simple AI protocols. The AI agent stuff is basically useful agents with something attached to it, right? There's a token or something here, and they do some kind of service, and they're token gated with their analytics or whatever it might be. There's a lot of useful agents out there that are doing some pretty cool stuff. I've used quite a few of them, and I've been experimenting around with quite a bit of it, and I like it. Okay, I like it. I think it's a really cool narrative, and there's a lot of money to be made in this narrative. But one thing that I think with AI agents, they will be made to infinity, much like meme coins were. Meme coins are made to infinity, because guess what? All these launch pads that are coming out to launch AI agents, that's exactly what they're going to do. They're literally going to launch millions of AI agents. Remember in the meme coin insanity, we were getting 50,000 new meme coins a day. It's gone down a bit now. There's less excitement around meme coins. But we were getting 50,000 new meme coins a day, 350,000 a week, 3 million a month. Mind-boggling numbers, right? And of course, only a few of those actually did anything. We're going to see the same thing with AI agents when things start getting heated up. It'll be where the greed goes, right? Where the new money goes, because AI agents are like meme coins, but they do something. There's something behind them. There's a little something more. They can talk to you. They have their own social accounts and stuff like this. They ape into other coins, and they have analytics and stuff attached to them. One thing that I like, though, is the AI agent frameworks, okay? Because that's something you can't just replicate and
So you're
infinitely print.
talking virtuals, AI 16Z,
Yeah.
any other ones that
A lot of other stuff going on. We have Momates coming out soon, which is I'm an investor in them, but those guys are doing incredibly good work and have had huge traction before their actual token launch. So that's one to watch out for. We have so many though. We have ARK. I really like Cerebro. Cerebro's down 70% since the Binance perps listing. Binance, what are you doing, man? Every damn time with Binance, if your coin gets listed on Binance perps, get the hell out, run away, man, because it's going to go down bad. Some stuff going on over there, isn't there? It's a different conversation. I like Cerebro. I like what Cerebro's doing. Actually, I was thinking about this the other day. I like what Cerebro's doing from an agent perspective. This is an agent, but they're also building a giant framework for Python behind it, which is 70% of AI developers work in Python, by the way, just FYI. So they're focusing in a really good niche, right? Whereas a lot of the more like Solana specific agent frameworks, they're focusing in on Rust developers who are building on Solana, which is fantastic, but focusing on those Python developers brings more traditional devs into the game that might not be crypto specific devs, right? So I like what they're doing. Plus, Cerebro is just one of the coolest agents. Not only does it have this cool framework and stuff they're building, and the devs are shipping hard. They're really hardworking devs, which I appreciate. Obviously, they're working for my bags, and I like that. But it's doing all kinds of cool stuff. It's dropped its own music album. It's staking Ethereum. They just bought a Bitcoin miner the other day, which is really cool. So that was really neat. Like, yeah, like it was saying like, yeah, human hands have had to set up, plug in the machine. I don't have a robotic element yet, but I'll monitor the machine and sell the Bitcoin and all this kind of stuff. I think that's really cool. Cerebro's mining Bitcoin, man. Nice.
Yeah, super cool. So you like the frameworks when you say you allocated 3 to 5% of your portfolio, you were mostly going on the framework side?
Yeah, like 80% of that is into frameworks and like 20% into agents. Like I bought the Nebula agent, which is the Mo token, which is a sort of proxy bet on Momate's doing well.
Mhm.
And I bought one called Memes AI, which is like an AI that generates memes. It's quite funny. It's like got the Shoggoth like tentacle thing is like its logo. It's a pretty neat idea. I don't know. But I'm much more bullish on frameworks versus individual agents. I think individual agents have a harder time standing out in the crowd versus the frameworks, which you'll see some of those really cementing massive leads.
Mhm. Yeah. Yeah, I think I completely agree with your thesis that the bubble is small right now. It has a lot of room to grow. It is likely to grow throughout the next year. There will be as a result of that growth, there's a lot of money to be made. Where that growth comes from, very difficult to predict. You're safer, not financial advice, with frameworks than you are with AI agents themselves. Predicting the AI agent is like predicting the next meme coin. Like maybe you get lucky and you do it, but more likely, as you said, there's going to be thousands, millions of these agents that come out soon. So, yeah. And then at the end of it all, it's going to burst. It's like, so take profit along the way, because do not be stuck. So many people are going to be like, this is it. Crypto has finally found its use case. We're taking AI to the moon. Like, we're never going to drop every AI
Super
company.
cycle.
Yeah, exactly. Like, no, not going to
It's the
happen.
AI super cycle for crypto, guys.
Yeah.
Yeah,
Don't
you
get
got to
caught.
take
Don't
profits
get
on these.
caught. Yeah.
Just practice basic risk management, guys. It it's so easy to let all this get to your head. But like realistic, if you get into some agent, you get in early and you put in $500 and you flip, and it's $10,000 now. Oh my gosh, take some money off the table. You don't have to sell everything. I get it. You don't want to be the guy who sells early and then it goes to $1 million. You know what? Take your initials out. Take out $1,000 or two, okay, and just pay yourself, okay? You can keep a whole big bag of it if you want, but most people never take a damn penny off the table and they round trip the entire thing. Don't be the guy who round trips the entire thing. You can keep a moon bag. There's nothing wrong with a moon bag, but just practice some responsible risk management. Part of risk management is getting your capital out and taking some money off the table when these things are up big. Because I know some of you guys are going to hit it big on some of these AI agents, and congratulations, but don't forget to pay yourself, because most people will, and they're going to lose everything as a result.
I'm going to end the episode right there. Mic drop. Everybody listen to Lark. It's fantastic advice. Thanks so much for listening in, and everybody. Lark, thanks for joining us today. Have a wicked awesome day, everybody. We'll see you tomorrow. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.